Welcome to the legislative update for the week ending Friday, April 16th. My name is Colleen Patterson, and I'm the Director of Employer Services and Compliance at Savoy. This week was relatively quiet regarding new legislation, and I must tell you that we did breathe a little sigh of relief. However, questions regarding implementation of the COBRA subsidies under the American Rescue Plan Act, aka ARPA, still remain. We continue to await additional direction from the Department of Labor and expect more detailed guidance in the coming days. And we do expect that that's going to be rather significant. So stay tuned. Assuming it's released in the coming days, we absolutely will be talking about it next week. In the meantime, I want to focus on the Employee Retention Tax Credit, as ARPA made several changes to this program. Again, although there were a lot of changes to the program, I want to just go over an overview of some of the changes for the 2021 Employee Retention Tax Credit calculation. So first, let's get started with the definition of operations suspended by government authority is expanded to include orders limiting commerce, travel, or group meetings due to COVID-19. So group meetings is a significant addition. Also, employee numbers increased to 500 or fewer, which is up from 100 or fewer, and more than 500, which is up from more than 100. If the business experienced a 20% reduction in gross receipts compared to the same calendar quarter in 2019, not 2020. Now, this is significant because we're already a year into this, and as we all know, 2020 was an anomaly of some sorts for everybody. So what this is saying is that you have the option to take a look at 2019. Specifically, you have an option to compare the immediately preceding quarter to the corresponding quarter of 2019. So this is a huge change. The maximum of qualified wages increases to $10,000 per employee per quarter with a 70% tax credit rate for a maximum of $14,000 per employee for 2021. So that's a significant increase too. And then lastly, what I wanted to touch on here is, which I think is of most importance, or at least of interest, is qualified wages must be paid between January 1st, 2021 and December 31st, 2021. Now, previously, prior to ARPA, it was ending somewhere around June. So they've extended this through the entire calendar year of 2021. Remember, healthcare plan expenses are also considered qualified wages, including healthcare expenses paid for furloughed employees. So it'll be interesting to see if carriers continue to allow furloughed employees to remain on the plan, and certainly that employers continue to pay for that. So it is, though, extended through to the end of the calendar year. So that too is of significant interest. This is important because ARPA provides a 100% COBRA premium subsidy for only a 6-month period from April 1st, 2021 to September 30th, 2021, based on specific parameters. And we've talked about that a lot in the last few weeks. So I'm not going to spend any more time going over that. However, this is why this is important. The federal government will be funding continuing coverage with employers claiming the reimbursement as a payroll tax credit through Form 941. The credit will be against the employer's share of Medicare tax. Also, like other COVID-19 related tax credits, such as the COVID-19 paid leave tax credits, this credit may also be advanced. However, that's one of the things that we are waiting for IRS guidance regarding how that process is specifically going to work. Also in the news this last week or so is the IRS recently confirmed in the IRS payroll industry call that the advanced credit will be claimed through Form 7200, called the Advanced Payment of Employer Credits Due to COVID-19. And we've seen that in some of the other relief programs. However, the form is likely to have to be modified. So we'll talk about that in a minute. It's important to note that employers cannot double dip with any other payroll tax credits. Also, they cannot double dip with wages used for PPP loan forgiveness. So this gets complicated pretty quickly. The Employee Retention Tax Credit, it is an incredibly powerful tool, and there's a definite art to taking all of these other programs into consideration when calculating the Employee Retention Tax Credit correctly, and also optimizing the tax credit benefits. So it's worth mentioning that employers may want to reach out to their tax advisors and take another look at this program to maximize the new enhancements as a result of ARPA. Also, employers want to understand how reimbursement of COBRA subsidies may impact their participation or loan forgiveness in some of these other relief programs. So they definitely want to make sure they have a thorough understanding of that. So moving on with other news, there was also vaccine news this week. The CDC indefinitely paused the use of a single-dose Johnson & Johnson COVID-19 vaccine after reports that a small number of recipients experienced serious blood clots. The Advisory Committee on Immunization Practices, an expert panel that advises the CDC, delayed a vote on whether or how to limit the vaccine while more information is gathered. So definitely stay tuned to hear more about that. Also, Pfizer's CEO said that the COVID vaccine recipients will likely need a third dose between 6 to 12 months after they are fully vaccinated, and suggest vaccinations for coronavirus could end up being an annual revaccination, which could be needed every year, kind of something like the flu shot, which you experience with that. So what's on the horizon, or what can we expect next? So more guidance from the IRS is expected regarding the COBRA premium subsidy. And as I mentioned, we do expect that this week, so stay tuned. The IRS is revising Form 941 once again to accommodate claiming the COBRA premium subsidy credit for the new subsidy period. The IRS recently confirmed that a revision to the Form 7200 is in the works to allow employers to claim in advance on the subsidy when the cost of premiums exceeds payroll tax liability. So definitely ensure that people are keeping a lookout for that as well. And then lastly, I think that one of the other things we definitely want to pay attention to, we're certainly focused on federal COBRA, but as far as what we think is coming, we also think that there's going to be possible state amendments to existing mini COBRA laws. So stay tuned for that. And as those things become available, we will certainly be sure to share that information as well. I think probably one of the most important takeaways from today, though, is we definitely want to make sure that we keep our seatbelts on because we are not out of it yet. So this concludes our update for this week. As always, should you have any questions, please reach out to your dedicated Savoy team and continue to use the resources available on our website at savoyassociates.com. From all of us at Savoy, stay healthy and safe. Thank you for joining us today.